Ladies and gentlemen, if you are a shareholder of Oracle, you are a very rich person today. Welcome back to Strongman Personal Finance. We're going to cover why Oracle stock is up 27% on their earnings drop. And I'm going to give you my price prediction, maybe. Welcome back to Strongman Personal Finance. So, if you haven't been checking the news, you may not have noticed that Oracle Corporation, ticker symbol ORCL, is up 27%. If we look at the stock's performance year to date, it's up 44%, and that's not even including the aftermarket move. Over the past year, the stock is up 70%, and over the past 5 years, the stock is up 336%. Oracle is cooking the market. They're doing so well that they have a $678 billion market capitalization, and that's before the movement in the aftermarket. This is a giant company that is absolutely crushing it. We're going to find out why. So I decided to pull up their fiscal year 2026 first quarter financial results. And of course, they can't have normal fiscal years. They have to have weird random fiscal years that don't align with the current fiscal year. Anyway, let's dive into the earnings. So, Q1 remaining performance obligations, 455 billion, up 359%. So, a performance obligation is something that you owe to your customer. And as you perform the obligation, as you do whatever you've promised the customer to do, you recognize revenue on your income statement. So by the fact that their performance obligations have gone up 359% means people are throwing money at Oracle at an insane rate. Take my money, Oracle, please. And over time, those performance obligations are going to become revenue and future profits of Oracle. Q1 GAAP earnings per share is down 2%. Earnings dip to $1.01 with non-GAAP earnings per share up 6%. So usually when they have non-GAAP, they're adjusting primarily for one-off events, but you have to always dive into the details. Q1 total revenue is $14.9 billion, up 12%. Okay. Q1 cloud revenue up 28% at $7.2 billion. 28% growth. Q1 cloud infrastructure revenue, $3.3 billion, up 55%. That's insane growth. I mean, you think about the performance obligations, huge increase, future revenue. And infrastructure revenue, 55% for cloud infrastructure as a service. Q1 cloud application revenue up 11%. Fusion Cloud ERP revenue up 17%, and good old NetSuite, which my company's switching to. I can't wait. We use Sage right now. It's accounting software. Up 16%. Everything is massively growing. So, yeah, their earnings per share are down, but I don't think the market is looking at that. They're looking at future profits, which are going to materialize from all this massive explosion in revenue and for all the future performance obligations, which will eventually become revenue. So, Oracle announced fiscal 2026 Q1 results. Total remaining performance obligations up 359%, blah, 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 blah. Q1 GAAP operating income was $4.3 billion. Non-GAAP operating income was $6.2 billion, up 9% in USD. GAAP net income was $2.9 billion. So their profit margin is 2.9 divided by 14.9. Almost 20% bottom line profit margin. That's a very profitable business. Okay. And I suspect the profits are going to grow in the future once they start recognizing that revenue. Software revenues were down 1% and down 2% in constant currency. Short-term deferred revenues were $12.1 billion. Deferred revenue is when you receive cash up front, but you haven't performed the obligation yet. And under the rules of accounting, if you receive cash without performing the service, you have to defer the revenue until you actually perform the service. Over the last 12 months, operating cash flow was $21.5 billion, up 13% in USD. We signed 4 multi-billion-dollar contracts with 3 different customers in Q1, said the Oracle CEO, Safra Katz. This resulted in remaining performance obligations contract backlog increasing 359%. It was an astonishing quarter, and my company's about to do this too. And demand for Oracle Cloud infrastructure continues to build. Over the last few months, we expected to sign up several additional multi-billion-dollar customers. There's more billions coming in. And remaining performance obligations is likely to exceed $500 billion. The scale, oh my God, they're cooking. They're cooking. The scale of our recent RPO growth enables us to make a large upward revision to the cloud infrastructure portion of Oracle's overall financial plan. While we will be presenting in detail next month at the financial analyst meetings, we're getting more details in about a month. As a bit of a preview, we expect Oracle Cloud infrastructure revenue to grow 77% to $18 billion this fiscal year, and then increase to $32 billion, $73 billion, $114 billion, and $144 billion over the subsequent 4 years. Oh my Lord, Jesus, Mary, Joseph. Good Lord. Most of the revenue in this 5-year forecast is already booked in our reported remaining performance obligations. Oracle is off to a brilliant start to fiscal year 26. That's crazy. Multi-cloud database revenue from Amazon, Google, and Microsoft grew at the incredible rate of 1,529%. We expect multi-cloud revenue to grow substantially every quarter for several years as we deliver another 37 data centers to our 3 hyperscaler partners for a total of 71. See, all these big tech companies, it's just like a loop, like NVIDIA and Oracle. They all like make money with each other. And next month at Oracle AI World, we will introduce a new cloud infrastructure service called the Oracle AI Database that enables our customers to use the large language model of their choice, including Google's Gemini, OpenAI's ChatGPT, xAI's Grok, directly on top of the Oracle database to easily access and analyze all their existing database data. Wow. This revolutionary new cloud service enables the tens of thousands of our database customers to instantly unlock the value in their data by making it easily accessible to the most advanced AI reasoning models. We're bringing it all together, bro. Okay. Oracle AI Cloud Infrastructure and the Oracle Multi-Cloud AI Database will continue to dramatically increasing cloud demand and consumption over the next several years. AI changes everything. See, this is a true like AI company, unlike Palantir. This is legit. Wow. Look at this. What is this? Look at this projected revenue growth. What's the price of sales of Oracle? This is a real grower right here. 11. Their price to sales is 11. Palantir's is like what, 100,000? This is pretty impressive. Okay. The board of directors declared a quarterly cash dividend of 50 cents. Who cares about that? This dividend will be paid to stockholders on October 9th. Okay. Freaking crazy. So they have the disaggregated revenues on their statement of profit and loss, also known as the income statement. And we can see that cloud revenues are 48% of revenues. Software is 38%. Hardware is 5%. And services is 9%. And over time, the cloud revenue has grown massively and it's becoming a huge portion of their revenue. Okay. It was 42% of their revenue last year. Now it's 48%. Software revenue actually dipped a little bit, but it's only 38% of their revenue. So that cloud revenue is really going to drive a lot of their future profits. All right, operating expenses. So cloud and software operating expenses were $3.6 billion. So you think about that. Cloud generated $7.1 billion of revenue. Software, $5.7. The operating expenses of cloud and software were $3.6 billion. Okay. So if you think about that, that's an insane margin. Okay. They're massively profitable. Let's see. R&D, they spent $2.4 billion. So that's a decent cut to their profits, but that's how you grow the business. General and admin, nothing crazy, $376 million. And then some non-cash expenses like amortization of intangibles and a little bit of restructuring costs. Okay, $402 million. So that was a slight ding to their profit and loss. But their total operating expenses only grew by about 11%. So they're massively growing their revenues and kind of keeping operating expenses under control. Interest expense, $923 million. They can easily afford to pay that. And a provision for income taxes. They had almost double the amount of provision for income taxes as the prior year. And a slight dip to net income. But if you exclude the restructuring costs and, the provision for income taxes, could have been a one-off thing. Yeah, I think their profits are going to massively explode in the future. Okay. Freaking crazy. Now, they do have some share issuance, but it's not crazy. Their share count went up. Their diluted share count went up by 2%. They're definitely growing faster than that. Let's see. What is this? Operating margin, 29%. That's a very solid margin. What else here? Estimated future annual amortization expense. Nothing crazy here. Balance sheet. Let's see what they have on their balance sheet. So as of August 31st, 2025, $10.4 billion of cash, $560 of marketable securities, $8.8 billion of receivables, and prepaid expenses of $4.7 billion for total liquid assets of $24 billion versus total current liabilities of $39 billion. But $12 billion of the current liabilities is actually deferred revenue, which is just cash they've received up front. But once they earn that, it's going to become revenue. So their real short-term debts are $39,874 minus 12,098, $27 billion. So I think they're going to be okay. Let's see. Property, plant, and equipment, $35 billion. They've definitely grown property, plant, and equipment. I mean, infrastructure as a service, that's pretty common sense. Let's see what else is growing on here. Notes payable. They actually paid off some debt. Income taxes payable, roughly the same. Leases have gone up a little bit. They're probably partially leasing and partially building infrastructure. Doing pretty good. I mean, cash flow is growing well. Everything's going well. This is a very incredible quarter. I'm shocked. I haven't dived into Oracle that much, but I'm actually extremely impressed. Okay. They paid $1.4 billion in dividends over the last 3 months. They issued about $1.1 billion worth of stock, and they paid off about $1 billion of senior notes and other borrowings. So they're doing pretty freaking good. Okay. Very, very impressive quarter. So what do you guys think? Are you guys impressed with Oracle? Is this the true AI beneficiary? This seems like a reasonably valued company for the amount of explosive growth that they're attaining versus other companies like Palantir. All right, let's do some comments. We're going to close this stream out. Once again, we have a new member. They keep popping them up. Welcome, JMG. They crushed it, want to buy calls, but got myself GME shares, which I don't understand because stop it. Daddy, these finfluencers say that the GME warrant is it's a special dividend, just like AMC was, bro. It's time to buy now, bro. All in. Pay Pig Gang, what's up? I'm getting offered more money to work on it. Do you think I'm a sellout grifter? I think you're a degenerate. That's your choice, man. It's kind of gross. It's kind of gross. I mean, that's ultimately a moral decision. Inkwells, pay pigs, peg pigs. Generative AI is AI. All right, well, thank you all for tuning in. I think that's all the videos for tonight. I'm freaking tired. I gotta go take a shower. I haven't worked out, or I haven't showered since I worked out. I'm stinky and disgusting right now. Anyway, like, subscribe, consider joining as a member to support the channel, and consider also booking a free 30-minute tax consultation with me, Christopher Bell, certified public accountant. I'll talk to you for free. I'll give you an upfront quote for your tax preparation, business or personal, any state in the United States. Yes, any state in the United States. S corporations, C corporations, partnerships, individual tax returns. I do them all, baby. Book your free consultation now. See the pinned comment below. And you guys have a wonderful, delicious, superstitious, delicious night.